Good morning, guys. How are you? This will be like a 10-minute video update on, the Twitter stuff that I have posted. And if I have retweeted anything, this will also be in the mix here. Yeah, oil, of course, is moving. Platinum was a great call. It's up, 20% since we called the big long on that one. And uranium done well, gold and silver. I mean, commodities in general right now is actually doing quite good. And also here, check my thesis on why this could be the early start of the energy boom. When we talk about not only oil, but also coal, gas, do we talk about a little bit lithium, and of course uranium as well. Looking at the prices and where they need to go in order to confirm a big uptrend. So let's dive in here. Let's do it. Here we have the Dixie. This is on the 1 month time frame. It is at a critical support. This is a roughly 15-year uptrend. We're hitting it for the third time, and typically that holds, right? Typically you get a little teeny weeny bounce here. You could actually come all the way up to the lower side of that trend line here, which is not on. And then if we get a fourth touch, that's typically when things go very sour on any chart. So we have a long-term support and we have a 5-year support as well. So the Dixie of the dollar is very interesting here for the long-term chart to see what happens here. Of course, if we plunge straight through, that is very bearish for the Dixie at that moment in time, the dollar index. But I do believe more often you get this little hump here, and then we see. Here we have the URA with the volume profile, which again I don't use it often. I have it as an optional to look at just to see key prices when it comes to volume. And looking at the volume profile alone, this is very bullish on the weekly chart for uranium. And the idea is that again you can see all the volume is basically below us here, and you have two major spikes. Once was 28, and you have one down here at roughly 20. And we have basically blasted through everything over the past few months here into 12-year highs. We are again having all the support below us here when it comes to the volume profile, and the biggest support is roughly that 29, 28, 29 dollar on the URA. That is the volume profile support. So overall, massive V-shaped recovery here, and we have basically taken out 4 years of price range in 2 months. So that's a really good sign here. Of course, we are a bit overheated on the daily, but if you check the monthly, for instance, or the quarterly, that could just be the beginning. If you look at those candles, especially the quarterly. A weekly uranium recap update was sent out yesterday, where we basically go through the ECFs, the ratios that is important, and a few other stuff, just to get a little bit of a pulse check on the uranium space that is available. Speaking of URA on the 3 monthly, so 1 quarterly candlestick, the uranium ETF on the 3 month time, monthly candles, no words are needed here. Again, look at the candle which we have here that is currently 2 weeks away from being printed. That is an insanely bullish candle. The volume, just the size of it compared to basically anything is just incredible. And this is what we saw on that previous chart, but this is gathered into one big candle. And from a candlestick point of view, you have the cup and handle play. You're peaking above that ceiling. You're peaking above the previous 2 wicks here. So if we can get a close roughly around here or higher, that is a really good sign of what to come over the next, I will say, 2 years time. So that is, yeah, it's not looking too shabby on the uranium sector at the moment. SILJ, we have our beloved silver miners. In a few years' time, it would have been obvious to invest into silver miners, but there were signs. And again, quarterly candle breaking out of the 15-year long wedge. We turned really bullish right here, 2024 April. That was when, on the Substack at least, it was said that, hey, you want to be long silver miners. This is the precursor to something bigger. And you can see the volume increase. and you can see again the breakout here. And the reason was right here. You can see the trend line here, if you can imagine it, right there. That was also when gold broke out against 2075. Also, when gold broke out against inflation, you also had silver break that big 26, and the rest is history. And we are going to go way higher according to this pattern. I wish I had more data, that it went back, 50 more years, because then you could do a lot of good stuff. But yeah, incredible. Really, really well. XLE, this is one heck of a lower wick on the 3 monthly candle. If the XLE sector, the energy sector, can cross 100, which is basically all-time highs here, that's a big tell that we're going to see higher prices. So a massive wick here, hammer is getting put in. We have 2 weeks still, and of course we have a lot of the moves here. The moves here is due to the Israel-Iranian conflict. So let's see how it does over the next few days, maybe weeks, just to see how maybe if it calms down. But nonetheless, if we clear roughly 100 here, you have open skies basically for the energy sector. And that is also why I think the video done, I think 2-3 days ago, 3-4 days ago, with regard to the overall energy sector and the potential boom, I think it's a good watch, because there will be money to be made. That is for sure. FIS, this is the broad physical gold trust. And you have the cup and handle here, which started in 2011. Then you had the prior peaks here again in 2020 and 2022. And then you finally broke. Again, this here, guys, is the April 2024, when, again, we turned very bullish on precious metals and the miners. And it has gone up ever since. The big measured move, we're still roughly 20% away. Again, expect overperformance. These are just targets, but you typically get, you rarely hit it to the T. So that is, again, gold looks, again, long-term fantastic. There's nothing wrong with gold. This one here we did talk about. Let's see if we have anything else. Just a little fun one here. Well, it was posted roughly around here on Twitter that volatility is incoming. It was basically due to the prior chart patterns and also the very, very low Bollinger Bands on the lower time frames, and look at the volatility that came. So it's a good thing to be able to spot volatility. Typically, you get it in one direction, right, where you get boom to the upside, or you start to break down. And this was just you don't see this often, by the way, where you get this kind of seismic oscillation here, and then it ends up here. So, but again, we are in a more bullish state for sure in silver than a bearish state. That is a given, I think, on most time frames actually. So this is one we can do here from in gold we trust. Again, this is not a technical chart well, technically it is, but this is the S&P, divided by the commodities, or the commodities index divided by the S&P, and it remains at historical lows. And yeah, you can just see here the median is roughly 4, and we are basically at roughly 1 here. And in order to just go to the mean, again, you have a 4x outperformance by commodities. And typically, the pendulum, it swings, back and forth. So not only will you get to the mean, but you will mean all the way to the upside. How high, we do not know. But I agree very much with this overall view of where commodities is and where they're going. That's a really, really good one. I have nothing further, actually. We could do one more here from Digger. That is also a guy that I follow. He's quite good. So this is the monthly chart on lock here on the Abra Silver, which is also a stock that we turned very long bullish on here at roughly $2. You can see the trend line coming in here with a little squeeze. So we have been long since 2. And yeah, we're breaking all-time highs really. So this is again one of the really good entries that we have made. That this was 1 year ago, and recently we have actually done quite well on the large time frame entries on gold and silver miners and platinum miners as well. So yeah, I have nothing further. Have an amazing day as always. Cheers, guys, and bye.